Welcome back to the show. We got another great one lined up. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. Before we get started, click that join button and get in that freedom zone, or join us in Patreon in the description box below for next to nothing. Great way to support the channel. And guess what? We got the list. We're going to go over it in there. We got the Diddy list. Let's start right here. $3.01 trillion market cap for crypto. It's off 2.5%. 93,700 plus for Bitcoin, Ethereum 1,700 plus, XRP $2.09. Everything bleeding heavily this morning. We're off 2.8 in the 24 and 8.8 on the 7-day. Range of price right now between 209 and 216. So we'll keep an eye on it, but currently the whole market is falling like a manhole cover from the sky. You know what? Some would say it's a blue light special. You have to make that decision for yourself. But I can tell you this, the tickets are flying off the shelf for XRP Las Vegas because it's the largest XRP conference in the world. And I don't mind telling you that there are 25 days. I'm going to get them, or 24 days. I'm going to get them changed to counter. I think that counter's off one day. Nonetheless, the VIP tickets are dangerously close to selling out. That is not hype. That's real. If you're looking to get a VIP ticket, now's the time to get it because they are dangerously close to selling out. And then we move to the GA tickets, which, you know, there's still a little room there, but not as much as you would think. Things are closing in. We are going to have the top industry leaders, former policy former regulators, people who helped shape and educate policy on Capitol Hill, and the list goes on and on. Go to xrplasvegas.com and take a look. And I tell you, it's Caleb and Brown's going to be on stage at XRP Las Vegas. I know you hear me talk about them all the time. You go, do I got to keep listening? No, you don't have to. But if you want the best night's sleep you've ever had since you've been in crypto, you will. You'll go open a free account because Digital Asset Investor and myself have come together, partner with Caleb and Brown to give you the best human customer service in the crypto industry, period, bar none. Don't believe me? Go xrpwealth589.com, xrpwealth589.com. Open your free account and you'll find out very quickly exactly why we talk about it all the time. Here we see, look at this. Michael Saylor has a plan to unleash a financial nuclear bomb. He calls it the 4242 plan, and essentially $84 billion aimed at hoarding nearly 7% of all Bitcoin ever. He wants to accumulate another million Bitcoin on top of what he already has at MicroStrategy. Well, listen, today's video is Bitcoin versus all the money. And I think I've got it set up for you to see exactly what I'm talking about. And then you're going to hear from some people who have been absolutely on Bitcoin, and now they're saying something else. And I don't know what to make of it, but I tell you, head on a swivel. First, we see this. Anthony Scarucci does a boxer-style debate with Kevin O'Leary in front of a crowd, and it is worth hearing this.
Senator Loomis has introduced a bill, the Strategic Bitcoin Reserve Bill. And I want to know if you think that bill is good for America and good for our economy.
And 90 seconds.
90 seconds.
Mark, thank you. So the short answer is yes, I think the bill is good for our economy. I think David Sachs actually did something brilliant by delaying through executive action a potential strategic Bitcoin reserve, because if you listen to David Sachs, he wants a bipartisan commitment to something like that. And what he feared was if Donald Trump and his team did it on their own unilaterally, then if a Democrat got into power, they would potentially reverse it for no reason other than the partisanship. And so the next 6 months are mission critical for that bill. And I'll just say three quick things very quickly. Number one, we have 27 reserves. It's not just oil and gold.
So that's his point to where we get a strategic Bitcoin reserve. Here's the opposition of Kevin O'Leary in that same conversation and debate.
Michael Saylor is talking his book, all right? The guy sells stock and pref shares and debt and then buys Bitcoin with it. The stock trades at twice the value of the inherent Bitcoin. That smells like something that ain't going to work long term. Just saying. I like the guy, but it has nothing to do with strategic reserve of Bitcoin, which will never happen because we'll never get buy off on a bipartisan basis. Michael Saylor is talking his...
That's interesting, because now listen to the two sides. Which is the real Kevin O'Leary? Take a listen here.
But it's Bitcoin. I mean, if you want exposure to crypto volatility, it's Bitcoin. I mean, it's sort of, it's not, ETH is not the go-to place unless you start to understand the utility of it. And then you start to ask yourself, well, why am I only in ETH? Why am I not in L2s? Like, why am I just doing ETH? So I think for the billions that are waiting to come into crypto, it's not going to be ETH. It's going to be Bitcoin itself. And, you know, frankly, there's a lot of people that say, I don't need anything else. I just need, if I want exposure to crypto volatility, I'll just buy Bitcoin.
And then he says this.
Michael Saylor is talking his book, all right? The guy sells stock and pref shares and debt and then buys Bitcoin with it. The stock trades at twice the value of the inherent Bitcoin. That smells like something that ain't going to work long term. Just saying. I like the guy, but it has nothing to do with strategic reserve of Bitcoin, which will never happen because we'll never get buy off.
And there you have it. So which is the real Kevin O'Leary and which one is right? You know, we have said that there are real concerns about Bitcoin, but will it be adopted? Will it get the strategic Bitcoin reserve? I mean, it appears that it will. Or will they all of a sudden in the 11th hour recognize all of the questions we've brought up? You know, and I don't ask this as a maxi just for those that don't know or don't listen to the channel often. I ask this because for the same reasons that we asked the questions about Ethereum and ETHgate and the compromised SEC at the time. We asked the same questions for 2.5 years about XRP being a security. It made me want to vomit. So asking these questions about Bitcoin isn't any different than what we've asked about every other token that we know that there's questions about. So we'll see. But here's Bitcoin and where it's going. And if it doesn't get the strategic Bitcoin reserve, I think it's going to be in real trouble. And that is Bitcoin ETFs, Bitcoin possible strategic reserve versus this.
So some people have heard me say this before, but I'll throw it out to the audience. What is Interledger's total addressable market size? All the money.
No. Yes, indeedy. Nobody wanted to jump on it, but that's the total addressable market size. So it isn't just about ETFs. It isn't just about strategic reserves for us. It's about really total addressable market size, which is all the money, all the value of the world. And that's the Interledger protocol, which obviously ties in and works well with many multi-blockchains, but obviously created at Ripple and gifted to the W3C that oversees the standard practices of the internet. So you see where this is going. Meanwhile, Paul Atkins, the new SEC chair, is wasting no time as he will be giving a keynote address at the SEC Crypto Roundtable discussing tokenization on May 12th. Again, I give you Bitcoin, the strategic reserves possibly around the world to happen, and then I give you Bitcoin ETFs, and then all the money. The chair of the SEC is going to be discussing tokenization on May 12th, 6 days from now, which is tokenizing all the money, all the value of the world, the traditional markets. You tell me what's the bigger market. Fidelity, NASDAQ, BlackRock, Invesco among the panelists participating, by the way. And here is President Trump's, one of his sons, Eric Trump, telling you about where banks are going if they don't watch out.
You know, what's the currency conversion rate between the US dollar, you know, and here? And do you trust the person on the other side? And can you communicate with that person efficiently? And how slow is the SWIFT transfer system going to be? You know, and how many fees are going to be taken by the issuing bank and by the receiving bank and by the currency conversion and whoever processes the technology? And what crypto does, it actually makes that whole process kind of redundant, right? And that's why I kind of really believe that if the banks don't embrace this, if they don't buy into it, if they don't embrace crypto right now, they're just going to be extinct because you're actually eliminating their function. It's almost like old school film in a camera. I mean, in the digital age, you just no longer need it, so it stops being used. And I think that's what's going to happen to a lot of big financial institutions. They're literally just going to stop being used because the system that they're implementing is slower, more costly, and obviously not innovative. Frankly, it hasn't changed since, what, the 1970s? Yes. Now, small updates, but I mean, crypto, in terms of the technology, is advancing 100 times as fast as these big banks. They can't keep up with the people in this room. So there's nothing that would actually bring me more joy to see some of those banks. They came after us so viciously and came after so many other people, many of the people in this room so viciously, you know, kind of fall to the very people that they came after.
Again, all the money, tokenization. David Schwartz.
I feel like we really are on the cusp of a mass institutional adoption, both of DeFi and of other blockchain technologies. I think this is also like one of the key obstacles to mass retail adoption. A lot of people in the space previously thought that retail adoption was like the big wave, but I think institutional adoption is a precursor. You have to connect to where people are. You have to go to where the value is.
That's exactly right. And that's exactly what we're talking about in this video. It's Bitcoin, the ETFs, and a possible strategic reserve versus the tokenization of the entire financial markets. You tell me. And then confirmation.
It's not realistic that the existing systems like banks are going to plug directly into the blockchain. They do need some connective tissue. That's what we provide. So
there you have it. So Ripple's providing the connective tissue so that we can see things like tokenization of real-world assets take place, like with Ondo Finance and OUSG and BlackRock's Biddle Fund. Come on in, right? And then we get more confirmation from Monica Long, the president of Ripple, that they're going to tokenize stocks and bonds.
Payments is also kind of like a base use case for other types of financial services. Like if you think about security settlement, like it triggers a payment at the end of it. So we thought we should tackle this first. But we always did have our sights set on expanding into tackling other types of financial use cases. So capital markets is kind of like a logical place to expand.
So stocks and bonds,
yeah, stocks, yeah, bonds, yeah. Exactly.
This has always been the plan. This isn't some new breakaway idea. They started with payments first because everything of value settles in a transaction or a payment, period. That means it's open to everything. They've been head down planning this for a decade or more. And look what's coming too. It is Dan Dunny from the DTCC, who was the head of Scarucci, which was bought by Standard Custody and Trust Company, which was purchased by Ripple. Ripple owned all of them. And then Scarucci was separated off and sold and became digital assets at the DTCC. And Dan Dunny's talking about this.
The CEO, Frank LaSalle, and the board had foresight that, hey, this is a disruptive technology that can fundamentally change the way we do business. We need to harness it, that technology. So they acquired Scarucci not as the only technology, but as a foundation, especially a foundation for how you do regulated assets, on which we could blend together the other technologies, distributed ledgers, smart contract frameworks, tokenization frameworks.
Which, by the way, they have already clarified Ripple, Stellar, EOS, and Ethereum as some of the protocols that are usable and will be used
to create a coherent marketplace. So they were forward-leaning in that model. As I mentioned to you, the one right to win that DTCC has in this model is we are the record keeper for quadrillions of dollars of transactions, but for fundamentally assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else, we can actually make it possible to tokenize $100 trillion worth of value. No,
they don't need anybody's permission. And isn't that how Ripple works? Ripple likes to go right to the bottleneck, right? That's why they launched their own stable coin, because it's an on and off ramp. That's why they bought their own custody solutions, Medico and Standard Custody Trust Company, which security was underneath that umbrella. So, you know, Securrency was, and then it was sold to the DTCC. You know, all of this is going after the bottlenecks of where all the value is, because that's the goal. Tokenization is the goal. And then how about this new clip you haven't seen yet from Subjective Views? Give them a follow.
Everyone's aware there won't be one blockchain. There can't be one blockchain. No matter how passionate you are about your favorite layer one, there can't be one. If there's only one, then there will be no innovation.
That's exactly right. And just really quickly, I hate it's pause it. I know you guys don't like it, but I got to say this because the reality look, the people at Ripple knew this. The XRP ledger developers, creators knew this. That's why they built a decentralized exchange into it. So all the other protocols could plug into that and make a market.
Because there's no break-in point. The barrier of entry is too high. And basically you'll have the malaise that you have in traditional financial systems, just you'll have it in blockchain form.
Yep.
So there'll be many, and they'll continue to proliferate in this world. But the real question, and the other truth is, you cannot scale a decentralized blockchain, theoretically impossible, that maintains each of the three balance points for a blockchain to 1 million transactions per second, really the amount that we would need to cover global scale financial transactions. You can't do it. So there can't be one. What that means is methods to connect chains together and to actually have a chain of chains is actually the essential component in this new world. And there's good solutions out there in order to connect chains. So I can have one blockchain that is completely public. I can stand up another blockchain, a layer 2 blockchain. I can proof its activity down to the lower chain. And now I've just doubled the scale of that chain. I can do that a layer above and a layer above, or layers outward, horizontally or vertically, to get to that point. But what that means is I have many chains. Now, those chains may be public. They may be private. There are good reasons why chains should be private. Transaction privacy matters. Let's say I want to run a dark pool. That's a useful thing in the markets. And so you do want to keep your transactions private. You don't want people to front run every time you move this far of value. It means you're about to do that trade. So there is a need for transaction privacy in the end. And that's a form of multiple chains, at the very least, if it's not multiple chains.
That's a great explanation of dark pools, which are really OTC desks, right? So back-end trading. So, and it's not illegal. There's nothing wrong with it. It goes on every single day. And again, what does it come down to?
Some people have heard me say this before, but I'll throw it out to the audience. What is Interledger's total addressable market size? All the money.
And isn't that exactly what we see when we connect these relationships with the DTCC and Ripple and XRP? Isn't that what we're seeing? All the money is now being connected to the new digital on-chain economy. Not financial advice from me or anyone else. I'm super excited where we're going. We're going into the freedom zone now. Oh, we got the list. Oh, we got the list. You're going to want to see the list. Aren't you wanting to see the list? Come on in. All